So this is going to be how to pay your kids out of your business, right? So whenever I set this up, we're always going to start the same way, right? So you have your operation side, you have your asset side, and everything will always flow down to your trust. Now, on this side, we have the W-2 income and then your W-2 income, right? This is for you and your husband. On this side, we have the triangle, which is going to represent your house. Terrible drawing, I know. So, we're going to focus on this. This is your picture right now. You have one property, as you said. So, income comes in here, flows into the account, right? And like I said, we're going to open up a separate account. We're always going to do everything right. And from this separate account, you're going to pay any expenses that arise. This is something we already know. We talked about this. From this, you're going to take a draw, right? Note that you're not putting yourself on payroll here, right? And in this draw, in the memo, you're going to write pay. You can write pay for yourself, pay for whoever. And you're also going to pay your worker bee, and this is your child. Now, in this memo, you're going to write outside labor. Now, you asked, are we still putting our kid on payroll? The answer is yes, but I want it to be very specific in this, right? Because payroll for you is not saying the same thing for payroll in my mind. Whenever you say payroll to me, that means as an employer, you're going to withhold their income taxes. It means you're going to withhold FICA, the business portion. You're going to withhold their portion, the employee portion. And then you're going to withhold their workers' comp that you're going to pay for, right? And this is all varies for different states. And then last is the unemployment insurance. So whenever you say payroll to me, my mind goes here because this is the actual definition of payroll, right? You don't have to do anything. You don't have to do any of these, right? And here's why. If you go to publication 15, page 13, I believe it's page 13. Don't quote me. I'm doing this from memory, but definitely in publication 15. So if you Google IRS, publication 15, and then Google or search paying children under 18, it says that if you're paying your child, again, it has to be your child, under 18, so between 1 and 17, you do not have to pay FICA, you don't have to withhold income tax, you don't have to pay the employee, you don't have to workers' comp, and you don't have to pay unemployment insurance. So this is big for you. And so it makes it a lot cleaner. So you don't have to pay any of those things, and you can still pass money to your kid for a deduction. Now the question is, how is my child taxed? Well, if you pay your child less than $12,400, it's super simple because this is the standard deduction for this year. So that means if you pay them less than this, they don't have to pay any taxes at all, right? So this is the golden number. If you were to pay them more, then you would only have to pay the income taxes on the amount you pay them minus the standard deduction, which in their case is $12,400. So yeah, and then you would only be taxed on this amount. So again, that's exactly how it's going to work. It's going to come income here, pay your expenses, a draw, and then you're going to pay them for labor. Again, you need a justification for their pay, right? The job doesn't matter, but again, you spoke about paying your child to shred papers. You're obviously not going to pay a person who shreds paper $100,000, right? This is important. So justify it. If you want to bounce the idea off of me, I'm willing to go back and forth with you and then come to a great amount. So there's there. So how does it affect your income, right? So you have we'll start with your real estate property and then we'll flow to your W-2, right? So your real estate property is already going to be a negative number probably, right? So we'll call it, we'll just say negative 1,000. So if you were to pay your child $2,000, that would change this number to negative $3,000, right? And then how you calculate your savings is you would do the amount you pay your child, multiply your marginal tax rate. So if your marginal tax rate was 22%, which is about average, that means you're saving 440 real dollars. And so that's exactly how the calculation is going to work. So again, we'll look at it one more time, and then if you have any more questions, feel free. You're going to take your income into that separate bank account. Again, pay your expenses, pay yourself, and then pay your child as you go along. You just can form a joint account with you and your child, and then just pay it into that account. Outside labor is what we call. And then we record that amount. And then on your income statement, you would put outside labor, child, and this is just for you. And that's how you track it. And that's how it's denoted. And then it just counts as another expense on your income statement. The important things is whenever you use payroll, understand that any CPA is always going to talk about these things. So you don't say putting your child on payroll. Really concentrate on paying child. I know it seems superfluous and I know it seems like semantics, but these distinctions are gigantic. So again, you're not putting your child on payroll, you're just paying your child. If you want to look at the pub yourself, it's IRS Pub 15, page roughly 13. Your child has to be less than 18 years old. If you pay them less than $12,400, they will not be taxed on that amount, but you will still take the deduction in that amount. And again, to calculate your estimated savings, you do the amount you pay them times your marginal tax rate. And if you need help finding that, let me know. And other than that, like I said, this is a great strategy. And then what you want to look at next is forming an IRA for your child, right? And to do that, there's a couple more steps that go in. I don't want to get too far ahead in one single video, but if you want help on this, it's a couple things that will tweak it, and then we can start doing that. But the important thing is for the IRA to take away is earned income. Your child needs to have earned income in order to do that. Okay, so if you have any questions, let me know. If not, we'll go from there. All right, thanks. Bye.